Hello, what are the risks of holding trades through earnings? Well, when you are holding your swing trade through earnings, there is a chance that the stocks might go up or might go down. In 2024, when I was swing trading using short option and swing trading strategy, I pay attention to that because I was buying stocks and selling it every few days, like 3 days or so between purchases and selling. But when it comes to 2025, when I'm using long option and swing trading strategy, I didn't really pay attention too much to earnings. So when we take a MA, for instance, we like to buy at this uptrend line, passing by the higher lows of the chart, which is the valley line. But right now, MA is higher up, close to all-time new high, is leaning on the upside wall of the mountain that is climbing. The support line supporting the upside wall of the mountain is climbing. It lean on it and start going up from there. Today is December 14, 2025, and the markets are closed on green the last day that it was open. That means the price at the end of the day was higher than the price in the morning when the markets opened. The price went up that day. The chart has the date on the x-axis from the past to the present, and we have the price on the y-axis from 0 up. So when we take MA, for instance, and we try to look at the chart, we can see earning here, and it was November 3rd, and at that time it pulled back down to, it was pulling back down and touch base with that support line. So November 3rd will be the day we have a red bar. So the price dropped that day, but it was going downward to this support line to begin with and reach it that day. The price dropped that day. For a day trader, it might be important to consider earning, but for long option and swing trader, it may not mean a lot because we don't make decisions on a short period of time necessarily. So when we take a look at 2024 here, arrows facing upward show where we purchased, arrows facing downward show where we sold. Buying it here and selling it there, and because we are using maximum daily chart, every single bar is a daytime. So for instance, when we purchase it, let's say there is an earning that came somewhere here. So we have an earning day there, we purchase it as it was going up, we purchase it, but then it pulled back all the way to the earning day. So, and then from there it started going up and we sold it there. So we bought it there, it pulled back on us closer to the support line that it was claiming, and then we sold it there. So we can count the number of days we held on to it, which will be including this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days, including the day we purchased it and the day we sold. About 15 days if I'm counting those tiny bar there as well. But then we sold it there, as a positive, because again the price corresponding to here was lower than the price corresponding to here. So buying and selling it every few days, we make small profits in it. And then it pulled back, and as it was going up again, we bought it here and we sold it, and then you can count it here. So you can see that earning or not, we have some pullbacks. For instance, this earning day that it pulled back here compared to this pullbacks here. This pullback is even deeper, but there was no earning here. There was a dividend payment date that came as well. So, and then from there it start going up. So yes, those dividend payment, earning, announcement, and all those can influence the chart, the price movement in a short period of time. But in a long period of time, the chart is going to continue its course. So therefore, let's take that things out of there. We have now really purchased it in 2025 when we start using long option and swing trading strategy and didn't want to buy it and sell it every few days, but buy it, and hold on to it to sell. So as we are looking at it, it's just not anywhere close to this valley line yet. It pull back to this and we'll start going up from there. But because we don't want to buy at a short support line, and this support line is long, is at least 3 years or so long, but it's close to the higher peak, that just tells me, and it touched base with it twice this year already. That just tells me that this support line is supporting the upside wall of the mountain is claiming. It is not the valley line. Therefore, because I don't want to use short optimum swing trading strategy, I don't want to buy it there, because when it's done with that support line, is done claiming that mountain and would like to come back down, I could get extended in the trade. For that reason, I just want to prefer to wait on it to come down here when I'm not entirely sure, because this is multiple years long already. But that is the idea on it. So therefore, even though it's raw at the support line and start going up from there, and it could well go up and make another new high, but we prefer not to buy. So based on the strategy we are using, it is now a buy for us next week. But again, you can see that with the earning when it pulled back down to the support line, it came back a little bit lower and start going up from there. So temporarily it pulled back. As a day trader, it might affect the day traders. They might make decision based on that, might try to avoid it. But again, as you can see, it went up after that and pulled back even sharper, and then start going up from there. So with longer trend line swing trader, we do not take earning into consideration to make our sell decision or buy decision. We just like to wait and buy at the support line we are willing to buy at, which is the valley line, passing by the higher lows of the chart. So the next one we are going to analyze is MANH. So when we are looking at this, we purchased it, that's why it's highlighted in our portfolio, and we purchased it here. Okay, so we are looking at it, it has earning. So let's first of all, last time the market opened, it closed on red. The price at the end of the day was lower than price in the morning when the market opened. It's right at the valley line where we like to buy it. So for us, yes, it is a buy during the week, next week starting tomorrow. And that is the strategy we are using going into 2026. We may not even wait for that to start going up for us to buy, but as soon as it's right around that valley line and it touch base with it already, we will buy some share if we want to. But the thing is, with this one, we already bought it here, and buying it here currently, we are a little bit negative in it. So but that, and we are okay with it. So now when we are looking at it, there is earning day here, and sometimes when the earning the announcement. When it is more than expected, when it met their earning targets, it could increase, the price could go up. When usually they miss their earning targets, the price could drop. But again, I don't really pay attention to those. So I don't know if they met it, they exceeded, or what. I'm not entirely sure, and I'm not sure if this information here will say much to us about it. But there is an earning here, and as you can see, that day the price went up that day, but then there was a big gap here when the price dropped. So does that mean they miss? It could even be this day, the earning day. Not entirely sure. So I think they tend to put the date on it as well, January 28th, and this one is January 29th, the day after. So the day the earning happened, the price went up, but then there is a gap down, and then the price dropped all the way down, and then when it started going up, we bought some share. But then again, we have another earning here. The price dropped back to the valley line and start going up from there on the earning day time, and then it continue. We have a drop here, but the price direction continue up. So let's see, and then we have another one here. So on those earning day, the price drop. We have a little bit of gap up here, and I think the earning probably happened on that green day, but then the next day the price drop, and then from there it continue going down, and here we have another earning there, and it seems to be an increase in price that day, but then the next day the price drop, and so forth. But again, those things don't mean much to me because I don't take them into consideration. I know I'm going to buy at the valley line, and I'm going to sell it after the peak is reached. So therefore, I just want to watch it to see when it's coming to the valley line, and when it touches base with it, I'll buy some share and just let it be, and estimate that it might go a little bit lower than where I purchased it, or it might linger around the valley line where I purchased it for a while, and I estimate that I might be negative for about 3 months in it before it will start going up, and I'm okay with it. So because again, I'm not trying to buy at the best price possible, and I'm not trying to sell it at the best price possible either. I'm not trying to be the best swing trader. I'm just trying to make money swing trading, and my goal is to make money on each one of my swing trade. So therefore, I do not set a stop loss. I just try to work harder at picking up good stocks to create my watch list, so that if I purchase the stock and then it pull back down, I will just let it be in my portfolio until it become positive, and then continue getting higher and higher in price, and I can continue accumulating price until I'm comfortable selling it to lock in the profit that I accumulated so far in it. And as we are looking at these stocks, for instance, you can see that it's uptrending stock, so therefore it's not going anywhere. From here, it could decide to come down here. It's less likely, but again, it is a possibility. And if it come down here, I might buy some share again, because it's another value line for us. So that is the strategy I use this year, and continue use it, and I will continue using toward 2026 as well. So therefore, yes, there is a risk involved with holding stocks through earning, but it is a short-term risk, and since I'm not swing trading in a short period of time, it does not really affect me. It only affects me in a short period of time, but then in a long period of time, it just does not really have a bigger impact on my trades. Another one we are going to, so this is a buy this week if you are interested in it, but just keep in mind that it could go lower or it might linger there longer. So MAR, we purchased that one as well, and we have not sold it yet. So when we are looking at MAR, we like to buy here, but right now the price, the last time the market open and close, it closed on green. The price went up that day, but the price is closer to all-time new high than it is to the value line, so therefore it's not a buy for us. When we want to take earning day into consideration, recently we have earning here, and it seems like okay, so that would be this day of November 14, and the price went up that day. Following it, the price continued to go up. So we can see that there is a gist that earning day, the price went up. So, and that is the things. What I noticed last year, trying to avoid dividend and earning last year, I noticed that sometimes the price will go up and sometimes the price will go down. And what I noticed is that when I sell it before those days and then the price went up, I will say, oh, okay, I missed money here. But then when I sell it before those days and then the price shot up, I will say, well, that's great. And then I decided that, you know what, I had to choose one way, not selling it sometimes and selling it some other times, but just keep it. It says selling it. If it reached my profit target, I wanted to sell it, I will sell it. But if it has not reached it yet, either way I'm going to make profit. But it has not reached it yet, and there is earning or dividend payment that will come across, if I just decided that to just let it be. So at the same time, when I'm buying the stocks, I don't try to avoid the earning or dividend day, thinking that, oh, if I buy it, I might run into that situation, therefore leave it until that day before I buy it. I tried that as well, and then decided that I'm just going to buy it no matter what, and then went through that. But the choice is just, even though last year I was buying and selling it every few days or so, I just noticed that it will go either way. It's going to be either going up or either going down, nothing between. So therefore I had to pick one side to be, so that when it goes up I can accumulate those. When it goes down, I'll just let it be until it becomes positive again for me to sell. But not trying to avoid it and sometimes missing it, because that's what that will create is a lot of time you will miss it. So you can just choose one strategy, so that sometimes you'll miss it, sometimes it will, like sometimes the earning will increase the price and sometimes the earning will decrease the price. But since I'm not going to sell it at a loss anyway, I just know that I'm going to stay in the trade longer. But by choosing that strategy, at least I'm not missing those increase in price. If it happened that I bought it and I have not sold it before the earning time happens. But it was more important for me last year than it is this year. I completely didn't factor that in this year at all. Whether it's dividend or earning, it doesn't really matter to me this year at all with the strategy I'm using. So that's how I simplify my swing trading strategy, to use very little of those different indicator and factor when it comes to making a decision to buy or to sell. I just know that I need to trace my value line, that I'm okay buying, that the price alone, that upturn line, that I'm okay paying for the stocks when it move to that value line, and be okay with it if I purchase it and it fell lower. Keep it in the portfolio until we become positive, and then we can climb up from there and then work on where I want to sell as well, knowing that I'm not trying to accumulate all the profit that is there to accumulate, but accumulate enough and to avoid overstaying the trade. So that is what I'm working on, and just limit all those different things that will complicate the strategy or the swing trading strategy that I'm using, or complicate my swing trading, just to make it simple, easy to understand for a beginner swing trader. So this is now a buy either today. It's still going up, and as we take a look at it, I'm trying to see if I bought it any higher here, but I'm not seeing any. The last time I bought it was there, and I saw it there before, so it was in 2024, and then I bought it again this year. So you can see that I bought it pulled back lower, and then start going up from there. So currently I'm positive in it. You can see how it lingered here and is somewhere here, and I have not sold it here. We can see how much I paid for it back then, and I'm still holding on to it because again we are using long up to long swing trading strategy, and last time it touched base with it was in August and sold, reached a high here, pulled back and here, and was in February or so, so few of 6 months or so, and we bought it around March this year. So March this year, we are in December, so that 6 months we went through that already, but again it has been more on the low side here. So we just keep like this mountain here, it didn't really do it here, so I don't know if this is coming close to the end of this valley line, but again that will make us go to the maximum monthly chart to see if there is any other. We didn't really trace any other, although there could be some we could trace as well, that there is a possibility this has a good touch point as well. So there is a possibility it might pull back to this line as well, but this one is 1, 2, 3, 4, 5, 6 years long. So I feel like this is going to be the valley line and not this, but again it could come back there. But when you are looking at it like this, is uptrending type of stocks, so therefore it's not going anywhere. If you pull back down here before we sell it, well, we'll just get trapped in it. We might buy some share more and claim to get the up, but we are not going to lose our investment in this stock. So I just, we are just going to keep observing it to see how much more longer we can stay in the trade before it will come back down. Another things we can look as well is, even if it comes back down somewhere here, the way the line is tilted will be positive in it because of where we purchased it. So, but again, we will lose some profit that we didn't accumulate in it. So we are just going to keep observing it to see how long further along it's going to continue going higher before it will come back down again. So, and this one currently is $298 that is selling. Let's see how much we pay for it. We'll go to MAR. Okay, so, and I think we talked about MA2, right? So MA, we bought it at $5.52 a share. In 2024, we sold it a month later for $542.50 and made $19 profit per share, or $232 for the total, and a 3% return. MAN8 we purchased say at $173, and we have not sold it yet. And MAR we purchased say in March this year for $244 a share, and again we have not sold it yet. So $244 a share, let's just round it to $245 a share because it has some sense, and now it's selling it at $298. So 298 minus 245 is $53 a share profit there. So, and again, does holding it through earnings matter in this instance? You can see that since we purchased it, we have 3 earnings terms that went through. We still have currently $53 profit per share in it. So you draw your conclusion there. In a longer period of time, those earning volatile impact on the price, the volatility impact on the price does not, in the short period of time, does not affect us much in the longer period of time that we are using to swing trade. Thank you so much for your time. This is not a buy for us. We already buy. Now we need to find an exit point for it. And again, that is a learning process for us as well, to see how long we can stay in the trade without overstaying. So thank you so much for your time. Thank you very much for watching our videos, and thank you for all your comments. Thank you very much for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and ninasub.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. We are organizing a small group online workshop where you can analyze stocks to see if any is well positioned for you to purchase some share during the week, and that is based on our long option and swing trading strategy. If you are interested, will you please check our online store liberdownload.com to buy yourself a seat. Thank you. And for more tips on our swing trading strategy and how to analyze your stock, will you please check the playlist in the description of this video for for the link. Thank you so much for your time.